All right, we're gonna go ahead and get started. Um, because I think I've allowed at least 5 minutes, ample time for enough people to get in here. All right, so gonna go ahead and proceed with the presentation. So let me share my screen. Share. All right. If you can hear me, go ahead and put in one in the chat so I can make sure I'm being heard and we don't have to start over. Um, to Mark's iPhone and Sir Silva. We'll get to questions at the end. Um, because I'm pretty sure everyone can hear me, so we should be good. So we'll save all the questions and everything for the end, so we can go ahead and get started. Because who knows how much this is going to take up. Don't want to take up too much time. So let me go ahead, get this out the way. Present. All right. Go back to the video. All right. So go ahead and getting started. Oh, we're going to talk about creating a watch list and how do you find stocks. So the presentation, basically the framework is how to find a stock, analyze the stock, and then add it to your watch list. So your providers, I'm gonna go ahead and let Kayla say her part, and then I'll say mine, and then we'll keep it going.
Hey, everybody. My name is Kayla. I go by IcurlyCae in the community and on social media, Instagram, and not really active on Twitter. A lot of you know that I am a mother. I'm an executive account manager, celebrating my 14th year at my job in March. A recent cosmetology graduate. I'm a Florida resident, so I see you guys, going in the chat where you're from. I'm from Florida, and I'm a naturalist. So just sum it up really quickly.
All right, and my name is Ray Sean, but I go by Ray. My @s on social media is Ray Jensen, Twitter and Instagram. I'm active on both for the most part. I'm a father. I'm a truck driver. I'm a Texas resident, and I'm into calisthenics. Um, but I'm not from Texas. So if people start saying like all the different places in Texas, I'm originally from Detroit. But moving forward, here's a disclaimer. I am not a financial advisor. This is in no way financial or trading advice. I am simply sharing options trading strategies that I use and have been successful with in the stock market. This presentation is for educational purposes only. There are significant financial risks involved with trading, and I'm not responsible for your losses in the market should you decide to utilize the information and or strategies discussed within this presentation. By choosing to proceed, you are acknowledging your understanding of this disclaimer. All right, so how to find stocks. Start with stocks that you use already. You know, companies you wear. If you wear Under Armour, if you wear Nike, if you wear, let's see what else is out there. Just all the whatever you wear, products you use, hair products, all those different products, places you eat at. You know, if you like Starbucks, McDonald's, those are places that you can start at. Amazon, that's a good place to start. And then once you start there, then you can eventually branch out. Now, screeners and scanners, maybe you have an idea of what you're looking for. Maybe you have experience on stocks and stock trading already. So you kind of already know what to look for. And then you can number it down for trading options. Like for instance, with a screener, you can use something to see if what percentage RSI is. So if you like to look for something that's between 40 and 50, you can set those parameters in your screener or scanner and find those things. You can use like FinViz, TradingView. Um, You can use TOS. TOS has great built-in scanners. That's typically what I tend to use. I just make a scanner in Thinkorswim, basically Thinkorswim slash TD Ameritrade. So in scans, that's another good one to use. And so those are the screeners slash scanners you can use, and you can put in your parameters as well as stock charts. It has scanners as well. Thank you for that. So you can get an idea if you have an idea for what you want to look for, and it can help you number down the stocks. Now, ETF slash sectors. So a lot of people follow like ARKK or ARKG or whatever ETF that you find. And oftentimes what you can do is you can look at that ETF and see what is some of the top 10 holdings for it. If you can't hear it, then yes, you probably need to hit something and there's something up with you. And yes, this will be recorded. Um, so yes, you can take your ETF like ARKK and see what all is in there. Look at the top 10 holdings, look at SPY's top 10 holdings. And then that can give you an idea for what you may want to trade on, as well as the different sectors. So if you want to look at the tech sector, the health sector, the fast food, those are things that you can put into a Google search and look for. You can just see stocks in tech sector, and then it'll pull up some stocks and stuff like that. And then article news picks. So basically, what you can do is you can see what articles are saying it's going to be a top growth or this is booming for today. I know CNBC, they have what's moving like in the morning, whenever hours are about to open up and stuff like that. They'll say what's moving pre-market, what's moving for today. And you can also look at those to find stocks that you may want to add to your watch list and to trade on. Next. So when you're analyzing the stock, so this once you find the stock, you want to analyze it. So you check the fundamentals. Have the cash and current assets been increasing? Has it beat earnings or at least had a good earnings? Because sometimes when it beats earnings, it's just beating what the analysts think it would do. So if it beats earnings, basically there was just their projections and it basically um did more than what they were expecting. You can use Yahoo Finance, investors.com. You can use MarketWatch to look at those things. So let me pull up. Um, so like right here, this is Yahoo Finance, and you can go there and then you type in your ticker, or whatever. You can Google your ticker, and then you can pull up a company. So right here, you got Teradata Corporation TDC, and then you just go down. You look at like the current assets, see if it's been increasing or decreasing. If it's decreasing, you would want to look into news and see why, as well as because I just for the most part fundamentals isn't necessarily my thing, but I just know to look at the current assets and look at the liabilities. So current liabilities, and if the liabilities is increasing, is the current assets and cash is that increasing? Um, and market facts and resources, the place that a lot of people don't like to visit, there's actually 3 videos in there where it shows you how to look at the um the balance sheet, the income statement, the cash flow, which is these 3 things right here. Now, some things on Yahoo Finance, if you don't pay for it, I don't pay for it. It's gonna lock certain things, so you can't go back more. But that is definitely what you would look at. So you just click on it, and like I said, go through that. And then also you can also look at Market Watch, and Market Watch has it set up differently. But you can go through there and look at the fundamentals of the company. You can also another thing, kind of getting ahead, but you can look at the upgrades, the analyst price targets, upgrades, downgrades, and stuff like that. So back to the presentation. So present. So that was just a quick overview over, Yahoo and MarketWatch. Also, you can check the news on it. Like I said, there will be plenty of articles you can read up on online. You can also use Twitter. Twitter is a great resource. I know Key Achille, the new admin that calls out plays. That's one of the things that he like to use is Twitter. So those are the resources you can look at: the CNBC, Yahoo Finance, MarketWatch.com, Investors.com. Now I'm gonna pull up Investors.com real quick, and I'm gonna show you the difference between a paid and non-paid. Um, so let me see. Investors. All right, so this is Neo right here. So investors.com, it has other things that it uses to analyze. It has more simplistic tools, and this is what I actually use. I actually pay for it, but this is the non-paid version, so it won't give you all the ratings and stuff like that. So let me actually log in real quick. Google. Oh, bro. Hold on. Give me 1 second. I want to show you this. Matter of fact, wrong thing. Go back. find out something wrong. Sign in. Google. Yes. All right. So pull it back up. My bad, guys. All right, share. All right. So this is actually the paid version of it. So whenever I go back, let me go back to Neo and pull it up. All right. I don't know why it's not showing it now. There you go. All right. So that's actually the what it shows as far as like on the paid program aspect. It'll show you like the composite rating, the EPS, the RS rating, the group RS rating, the SMR rating, and the accumulation distribution. So obviously, like me, you probably don't know what that means. They have an actual site that you actual part on their website that you can go to and you can see what it means and how it rates it. So that's how I actually use it to research companies and stuff that I'm actually looking for. That way I don't get confused or anything like that. And I'll have to also rack my brain around trying to figure out the fundamentals and having to read more as far as into the company and stuff like that. So that's investors.com. And like even on there, you can look into what's their picks and stuff like that. So let me just go on AMD. So right here on the AMD aspect, it'll say that it's number 5 in the group and it has who's ranked number 1 in the group. So sometimes when you put in stocks and you're looking at something, you can also see who is the highest ranked in that group. And then that might lead you down another rabbit hole of things to look into if you want to. So, and as well as on the paid version, they also send you out like a newsletter on what's going on in the market. So they keep you informed and then they have learning centers as far as on their platform. So now, you also want to check to see what phase of the market is in, and these are the 4 phases of the market: accumulation. I typically call phase 2 markup, three distribute, three distribution, and 4 I call it markdown. And you can create different watch lists for different phases. So, like, let's say you just want to keep an eye on things in an accumulation phase, and once it starts going into phase 2, you go ahead and hop in it for whatever type of trading strategy you want to use for if you want to use more of a 3 month out to 6 month out expiration, or if you want to um, trade weeklies or whatnot, you can keep up with all those different things and put it into different watch lists. Or you can keep it on the same watch list and you just have a separate Excel spreadsheet and you make notes of what phase it's in and when you want to look at it again or whatever. However way you need to keep it to stay organized. So let me click next. Now, what's the benefits of a watch list? You can have multiple watch lists if it helps you, like I was just speaking on. Like, let's say you have a watch list for if you want to play something like I said, the RSI. If you want to have one, so say the RSI is at 40 on this one, on these, and blah, blah, blah. Or if you want to have one where it's below a certain moving average, you can name it how you want to and organize it how you want to. Maybe you split them up by sectors or ETFs that they're in. Like I said, you keep it organized to your liking. It also shortens your research time. So after you initially compile this watch list, you can just trade the same stocks over and over. So once you created it and now you just plan out your trades, you can just use those same stocks over and over and over. And that's what some people like to do. They don't like to jump from stock to stock or see what's running in pre-market and just pick those stocks. They rather trade something that they're familiar with and that they studied over a period of time. As well as some people don't just trade options, they also buy and hold stocks, or maybe they might swing trade. So they might look at Chris's whiteboard and maybe they might have a watch list with stuff in there or their own separate of things that they're looking to swing as far as like the stocks. So to sum it up, you will find your stock using either ETF, news, things that you're using. You analyze them. So you analyze them by looking at the news, seeing what phases in. You don't have to necessarily do the technical analysis up front. You're just trying to create a watch list. Now, when you're trying to get into actually getting into your trade, then you would use the technicals and analyze them, but you at least want to know that you have a watch list with sound fundamentals and things of that nature. So you add them to your watch list and then you plan out your trades. And so now we're into the Q&A portion. So let me stop the share real quick so I can see the chat. Um, and then you can raise your hand if anybody has questions, and then I will call on you or whatever. So, um, ADE Mola, you can go ahead, ask your question.
Yeah, hi, thanks. How, what website would you go to also see various analysts' price targets for each of the stocks? Because I know you could certainly use the charts like the RSI, the MACD and all that, but if you also want to get into something, but you're curious as to what market analysts are projecting the price to be, what types of sites would you go to?
Well, in the chat, somebody put tipranks.com, but Market Watch has it. Whenever I was on there, on the actual page, when you're looking at the ticker or whatnot, if you scroll down, it'll say, you know, the upgrades, maintained, downgraded, and who it was downgraded and stuff like that by. So Market Watch is another good resource to actually use that.
Market Beat and Tip Ranks as well.
Yeah, I know he went probably back mute. Hope that answered your question. James Yepes, go ahead, ask your question.
How you doing? Thanks for this information. I think it's great. I just have a question because I'm fairly new into stocks, but how do I find more info on like what RS, all these little acronyms you guys have, like just so I can know what the hell I'm looking for when I'm doing my research?
Yeah, we actually did a previous class on like the leading and lagging indicators. We was talking about the RSI, so that's an indicator. So you can watch that in Will Squad University, as well as there's some information and market facts and resources to assist with you knowing those things.
Gotcha. All right, thanks.
No problem. All right, Clyde, the third, you can go ahead and ask your question.
Yeah, what's up, bro? Like how to use the scanner on TradingView.
I can barely hear you.
Yeah, it's kind of muffled.
But I think you was asking how to use the screener or scanner on TradingView. I actually don't use TradingView to actually do my screening and scanning. I actually use Thinkorswim as far as like using their scanner. I think it's more powerful and it has more settings that you can adjust. So even though I chart on TradingView instead of using TD Ameritrade to chart, I actually use TD Ameritrade's scanner. But I'm pretty sure there's a video on YouTube on how to use the actual screener on there. And I know they're constantly upgrading and adding like different features to use it. And I wouldn't be surprised if they had a learning center on their website. A lot of these places have learning material on how to actually use their website to the best of your abilities on there. So I just go there, look. If you can't find it on there, then go to YouTube.
One other, never mind. I was going to answer a question on here, but never mind.
You could have went ahead and answered it. So it might answer somebody's question.
But I want everybody to know this. There are so many different brokerages out there, and there are so many different charting platforms out there. And so when it comes to those specific questions about a brokerage that you may be using or a charting platform that you may be using, what we recommend is that you YouTube how to use your specific brokerage, because we don't all have the same banks. We don't all put our monies in the same places. So you may be using something that Ray or myself may not be familiar with. So just to be fair, if it's specific to something that you're using, then we're just going to recommend that you YouTube the layout of your brokerage or YouTube the layout of the charting platform that you're using. And a lot of times they have tutorials within those platforms to help you understand the layout.
And as far as like people asking, like, I just seen a question in there as far as like what broker should I use. We have an actual in Market Facts and Resources. We have a commonly used brokerage, especially for like the United Kingdom. And it's also best if you're international to ask like in the international chat or in the Canadian chat on the specifics of your country or whatever, because me and Kay are located in the United States, so we don't necessarily know the international things, and we don't want to give you um a wrong answer to your question. But also somebody asked before I call on the next person, and Jay, you'll be the next person. Um, when you would want to use a scanner or screener is basically up to you. I like to sometimes use like a pre-market scanner or like scan over the weekend for things to actually like number things down and conform it into a watch list. So it's really up to you. People use them in the middle of trading hours. Some people use it at the end during power hour to find things that they like. It's basically up to you and how that scanner is built. So Jay, you can go ahead and ask your question.
All right. So my problem is I'm greedy. And I know that's probably my downfall. It's probably going to work against me. But I noticed that when certain sectors pop off, it's I just don't want to like leave money on the table. So do you think it's a good idea to create multiple watch lists for different sectors? Because I feel like if the I think the semiconductors popped off one of these weeks that passed, um, and I missed out on a lot. And I know y'all preach all the time that follow what you know, but I don't know it just kind of it gets me when I'm missing out on all of those plays. I don't know, still learning.
Right. So I would say with that, you don't want to let that be your trading psychology. You kind of want to work on that because that might cause you to lose money. But essentially, if you want to make that and you feel like that'll help you stay organized, then you can. Like I was showing on investors.com, like they oftentimes when you look up a stock, it'll tell you like which rank it is. Like Neo was like I think number 2 or number 3 in the group, and they was saying Tesla was number 1. So you can like go on there. Like I said, I pay for it. So if you want to, that's up to you. I think it's a great resource. But you can see like who else is in the groups and what the rating is, and you can take like the top 5 of the semiconductor sector and then have a watch list for that. It's just make sure that you don't do so much to where you get confused and where you can't be productive. You know what I'm saying? As long as it's concise and you can do it in a quickly, timely manner, then do it. But if you're going to be scrambling all over the place, then it's best to not do it because you don't want to make sure that your time is shortened, basically. Because if something's popping off and it's only popping off for 5 minutes and it takes you 3 minutes to find that watch list or whatever, then it was no point, being in it. You know what I'm saying? Does that make sense for you?
Yeah, okay. I know some more seasoned traders talk about sympathy plays. So is that like if one ticker, pops off, another one in that same sector is gonna follow? Is that what that means? When they say sympathy play?
Sometimes, but also it can be related to something else. It's not
Okay.
always because one popped off. It could be because this company has a rival company. So because that one's dumping and people don't like that company, they're going to like the rival company or something like that. Or somebody, like I said, basically a rival company or anything like that. It's just that's why it's good to research the company, know what is made in the company, know what parts they need. Then that will help you find like a separate company. So maybe this company actually makes the parts for that company. Like I was just reading, like Bandwidth actually does the communication. I think it does the communications for Zoom. So you're able to communicate on Zoom because of Bandwidth. So even though Bandwidth isn't that known, it's powering Zoom in like a couple other companies. So that's why you want to read and be mindful of those things. So because like, let's say Zoom popped off, Bandwidth might follow it because Bandwidth powers it. If that makes sense. Well, that should make sense. Does that answer your question, Jay?
Okay. Yeah. I appreciate that. And then my last question was going to be, so at the beginning, I thought that I really didn't have to pay too much attention to the Greeks, but I'm finding that's definitely not the case. And volume, that plays a big part of me deciding to get into a specific player now, right? Like I shouldn't overlook that when it comes to volume and theta and delta.
Well, so the volume of the contract, yes, you should pay attention to that. You should pay attention to the open interest, and yes, you should pay attention to the Greeks. I know IcurlyCae, Kayla has a video on that and everything in Market Facts and Resources. So not to take up too much time, you can definitely go there and get that information. So that way, you can trade right. But looking at the Greeks is very, very important. I think Kayla, you have something to say? Whatever.
Volume is basically going to be the amount of contracts traded within the day, right? So it resets every single day. So you want to make sure that you're looking at the volume, because obviously you're going to need volume to move the stock. And then your open interest is basically going to be the amount of people that are currently holding that contract. And it's very important for you to have both, because you don't want to get stuck in your contract. So it's important, and theta is just as important as well. And the Greeks. So let me just include theta into the Greeks, because that's what it is. It's all very, very important.
Okay, because I noticed that some plays that I look at, it could be charting beautifully, but if the volume isn't there, then that may not be the right play to get into. So I appreciate that. Thank you both.
No problem.
All right. Rob, you can go ahead and ask your question.
Yes, sir. My question was pretty simple. So I just joined the Wealth Squad literally about 2 days ago. And I just had questions about, as far as stocks, or should I say, I think I was looking at one of the courses. It looks like he offers, I think, Stock Gems, I believe. Does that course, or is there any courses that actually specify or teaches you as to what stocks to actually invest in, so that you're not, like basically all over the place and things like that, if that makes sense?
So that's specifically like stock trading. That's not actually options, but I believe his whiteboard magic is supposed to like go over like how he does his research. So if that's something that you're looking into, then I would just get his whiteboard magic course.
Or the
That's
whiteboard
how-
magic course?
Right. Because that's what he basically that course shows you the behind the scenes of why he posted stuff in the whiteboard tab in the group.
Mhm.
So it goes behind that. So you'll be able to get into his mind on how he posts those and why he posts those. So
Okay.
yeah, that'll be what you're looking for.
Okay. All right. Thank you.
No problem. All right. I'm not gonna hold you. You can go ahead and ask your question.
Thank you for taking it. My first question is, what indicators do you usually use when you see something's past the 20-day moving average? Because I usually find a bunch of them that do, and the setup looks kind of good based on RSI, MACD, and I still find ways to lose.
Nothing as far as when it comes to indicators, nothing's ever 100%. Sometimes what could be playing a factor is maybe you picked a bad contract, or maybe news hit it, maybe the market was having a pullback. I think Key made reference to this. I think it was like the other day where it was like you want to pay attention to SPY. SPY has having a pullback. Usually the market follows SPY for the most part. So that could be why, but no indicator is like 100%.
Okay.
So that's the main thing. Like in this game, you're going to take losses and stuff like that. Nothing is ever 100%. That's why sometimes you'll see like on YouTube videos or whatnot, people be stoked just to find a indicator pattern that might help you win 50% of the time, because it's never going to be 100%. It's probably never going to be like 70, 80, or 90%. So I wouldn't even worry about it. I just keep going over it and find things. Like do your research on the companies, make sure the fundamentals and everything looks good. Look and see what the news is saying, and then go from there, because you kind of want those things also playing into your favor.
Okay. And what percentage of your account do you use for trading versus investing? And do you have money to your account on a daily, or you just try to flip what you have?
Hold on, can you repeat that? I couldn't.
I heard him right. He's asking what amount of your account should you trade with, and what you should just trade regular, shares with. Always invest heavily.
Right.
More than you do with options, because options is tied to an expiration date, and at expiration date you may lose everything if it doesn't go in the direction you want to. But of course, if you're trading stocks, you're still holding a position unless that company just completely goes away, right? So if it goes down, you're still locked in because you own those shares. So you want to play lighter with options than you do with shares, if that makes sense.
So would you say like 75-25?
That is going to be trader preference. So whatever your risk tolerance is, you may want to do that. You may want to do 75-25. Somebody else may want to do 80-20. Somebody may do 50-50, but whatever is comfortable for you, just know that whatever you're investing into options, you have the potential to lose it, even with stocks too, but higher risk with options.
Okay. And do you add money to your account, or do you just try to put what's in there?
It's always good to he asked if do we put money in our account. It's always good to add to it if you can. I mean, the name of the game, especially with what Chris preaches, is basically continuously to add, because you want your money to make money. So it's always good if you can add to your account. That way you have more to play with. So like, for instance, going back to what Kay was saying, somebody might not be able to go 50-50, or they might not be able to go, you know what I'm saying? They might have to go 80% stocks, 20%, 80% options, 20% stocks, because they might not have the capital. And that's why it's all trader preference. Some people is coming into this with a lot of money. Some people is coming into this like $500. So that's why it's always about what your individual situation is. And if you can add to it, it's always best to constantly add to it.
Thank you.
No problem.
Can I say something about that really quickly? So a lot of people in the community, I want to caution you, when you see people trading with extremely large accounts, I do see that there's a large following of people who flock to those people. You have to realize that someone who has a couple $100,000 invested in the market has a higher risk tolerance. That means that they can put a lot of money towards the same single play that you might be in, and they may have a higher win rate, or not a higher win rate, but they may have a higher dollar win rate than you. And it's not to following to make conscious of, I'm sorry, can you mute your mic, John? The baby sounds so sweet.
Yeah, I'm muting. Go ahead.
But if you have someone that has $100,000 and they buy, I don't know, 100 contracts of something, and you buy 5 contracts and you see that they've made $20,000 today, you may be tempted to say, I'm going to follow everything they do. But you don't know if they know how to trade or not. They just may have a lot of money to throw at a play, which will yield them a higher dollar amount. So I just want to caution people, because I do see that a lot. I see a lot of people like, oh, you made $20,000 today, I'm going to follow everything you say. Please don't do that. They just have a higher risk tolerance. Does that make sense?
Very much.
Can I get a 1 in the chat? It makes sense.
Basically, what you're saying is they invest more, right?
Basically, what I'm saying is that they have a higher risk tolerance, so they can put a lot more money towards the same play that you may put. And let's just say everybody gets 30%, that everybody wins 30%. Well, their 30% is going to be multiplied by however many contracts they have. And so it may yield 20, 30, 50, 40, I don't know, however $1,000. You just need to realize that, or what I'm encouraging you all to realize is that don't chase people just because you see that their account is so large. Please don't. Just do your due diligence, know what you're getting into, but don't run after people whose accounts are so large. Me and Ray talk about that a lot.
Exactly. And then the other thing is that I just remembered to say. So one of the things of why it's important, I wouldn't say necessarily just super important, but you kind of have an understanding a little bit of a company's fundamentals, because something happens what I call the smart money trap. So what is the smart money trap? The smart money trap is where a company reports good earnings, but then it falls. So why would a company reporting good earnings fall? Sometimes what it could be is the smart money trap, where people, so basically we're considered retail traders, and we're considered the weak hands. They're considered the strong hands, and they're the smart money. So what they'll do is they'll wait for a company to report good earnings and use the news for us to want to jump into that play. and then they'll offload everything onto us. And then once the price drop, because we start, getting scared and everything, they oftentimes come back in and buy in at that lower price. So they know that this is a strong company because their earnings. They know that the future, the projected growth, they know what that is. And so what's going on is they want to get in again at a lower rate. They want to sell where they are now and then get in at a lower rate. And that's often what happens. So people be like, why they report good earnings, but they fail? That could be a possibility, the smart money trap. All right. So let's see. iPhone, go ahead and ask your question. I just asked you to unmute yourself. I know it's a bunch of you in there, probably.
Hey, how's it going?
Good. How are you?
Good, thank you. I kind of joined pretty late. So I know it's gonna be recorded, but I did just want to go ahead and ask this simple question. Um, can you just quickly go over what scanners are? Just it'll probably be later on in Wolfscar University, and I'll go look over it. But I just want to ask the simple question just so I know the overview on it.
I mean, the simplified answer of what a scanner is just basically something that helps you scan through stocks. Like I said, some people call it scanners, some people call it screeners. I use the Thinkorswim scanner. Basically, that's also TD Ameritrade for the people who don't know that those are the same company or whatnot. So it just helps me simplify scanning. Like some of these, like I think the NASDAQ 2000 or something like that, got like 2,000 stocks in it and stuff like that. So it helps me narrow everything down. Instead of having to research through 2,000 stocks, now it might only be 100. So like I said, you can set the criteria for it to be maybe the RSI is 40%. 40%, or maybe you like to look for a stock that just crossed above the 20-day moving average. Also in Thinkorswim, I think it has it to like where you can scan for cheap option contracts. So that's basically what it does. It just helps you weed things out, or maybe you only want to look at companies that have options available for them, because all companies don't have options available. So that's basically, it's just a tool to help you simplify things and get through.
Criteria, basically.
Yeah, it helps you get through everything quicker.
Yeah,
cool.
You're able to put in, different sectors, or maybe stocks that are trading with X amount of volume, or maybe indicators. Maybe you're looking for certain crossovers on the MACD. You can input that information. You can do large floats. It basically just narrows a lot of things down based on your trading style. So you're able to just put those numbers in, punch in whatever indicators you want to look for, and set alerts and things like that. So it makes the process easier. I'm actually using Flow Algo, and I'm pretty sure that Chris uses that too. They have Benzinga. I have that in Market Facts and Resources guys as well. How to find companies to trade is in there.
Cool. Thank you guys so much.
No problem.
Thank you.
And also to answer somebody's question, I forget where it was at. I think it's Sean Michael. How do you determine the likelihood of a stock to rise? You can look at indicators. You can also look at one of the quicker things to look at is like what I was speaking on earlier. You would look at the analyst price targets. Now, the price targets are based on a year out. So it's not like they're saying it's going to reach that within the next couple of weeks or the next day or whatnot. But that kind of also helps you gauge to where it might possibly go. Also, looking at the news, you will see if there's good sentiment around them growing in the future, as well as I think it's like EPG. I think something that the Will Squad shared on their Instagram is another thing to look at. Also, you can look at their financials to see if they're constantly growing as far as their assets to liabilities, making sure that there's a good ratio there. So those are, to name off a few ways that you can look at a company and see if it's going to be growing or whatnot. But let's see. Ijiro, go ahead and ask your question. I think I said that right. Apologize if I didn't.
No, that's fine. Thanks so much. Thanks for the work you guys are doing. So I just have a quick question because I just joined the group. I think earlier this month. So my question is based on Chris's whiteboard and current options ideas. Are they just for options alone, or are they for stocks as well? Because I'm based in Ireland and I use a platform called Trading 212, and it's mainly for stocks. So I just want to be sure that I'm actually doing the right thing.
And you
So
said
that's
you're
my
using whiteboard, right? The whiteboard tab.
the whiteboard tab and the current options ideas tab on the Wealth White page.
Yeah, the current option ideas tab is just for options. If you can only trade stock and you can't trade options, then I would just stick to the whiteboard. Because
Okay.
that's for swing trading. That's basically for trading stocks.
Okay. Okay, that's fine. Thank you so much. And my second question very quickly is because again, I'm kind of relatively new. I'm trying to I don't know if you guys have any videos on how to do due diligence, kind of like what we've already talked about earlier. And I already got some great insights about using the likes of investor.com. But how can I actually do my due diligence so that I can actually be sure that I'm actually doing the right thing before I invest in a stock instead of just taking a wild guess or just going on based on what people are saying or just say because I invested in Naked and the shares dropped badly and I was like I haven't really made any profit from it, but I've made profits from other stocks that I've invested in.
So with the due diligence is basically like as I was saying earlier. So you would want to look at the financials since you're doing stocks, like especially like with investors.com. I think that'd probably be a great resource for you. They also I kind of like quickly went over it, but back on their exclusive IBD rating system, it shows you like when stocks get to like 90% or 80 on their value rating, it's usually about to pop, as well as looking at the news and seeing like what are the top 5 or top 50 growth, as well as when you pay for membership on some of these websites, they'll also give you like a list and what they're looking at using analyst price projections. So all this stuff is basically doing your due diligence as well as looking what the sentiment is on Twitter. Sometimes when you look on Twitter, I know Key gave a list of Twitter people to follow. If people don't have it, I guess I'll put it out there or ask him to. But you can also quickly number down your research, just looking at seeing what some of what Twitter people are saying. Sometimes they share their charts. But the main thing is looking at the fundamentals, looking at the financials, looking at the news, what they're saying. Also, I forgot to put this out there. So we just changed presidency, right? So we know that Joe Biden and them are looking more for clean energy. They're looking. So basically, you could say that the energy sector, anything that's going over clean energy, whatever those companies are, or cars like Tesla and NIO, that's going to be, not using gas and stuff like that. Basically, uses energy. That's kind of like another way to gauge sentiment, like knowing what the current presidency, what they're looking for. They're trying to legalize marijuana, stuff like that. So that would be why the marijuana stocks, or cannabis stocks as people call it, are popping and stuff like that. So that's another thing to look at. But the main thing is going to be the financials and the news and stuff like that. Because if they're saying good things, if they're expecting them to pop, if those stocks are in great ETFs, like if it's an ARKK or ARKG, or VOO, you know that those are good stocks because they're being picked for a reason. And people love Kathy Wood. So whenever she buys something, most of the time it ends up going up the next day or the next week when people end up seeing it.
I want to piggyback off of that with you. So when you're looking to do your fundamental analysis, you kind of should have like a daily guide of what you're going to do. Wake up in the morning, check Yahoo Finance, check the S&P 500. When you're looking at individual companies, you want to make sure that they are making money, but not only are they making money, are they keeping more money than they're spending? And that's the problem with some companies. Some companies are making money, but they're spending more money than they're actually making. So it needs to balance out where they need to be making more money than they're actually spending. So they're keeping money. Think about things like this. Fundamentally, do people like their products? Is the company growing? Do you see a future with the company? With the way that we're trending, we are going towards more clean energy. We're going towards more electric vehicles. Would this company be one of those types of companies? You also want to look at, historical data for the company, see what they've done in the past. There's a little heat map that you can actually follow if you trade in Robinhood. I don't use Robinhood. I have it open because I like the ease of the platform and I can see certain things, but I don't actively trade in there. If you actually look at a particular stock and scroll down to the
bottom, right there.
If you scroll down to the bottom where you, when you actually enter into the option or enter into the stock, they have this little heat map and it has dots. And on those dots, it's going to show you each quarter. Are they missing? If they're missing, it's going to be a filled in dot that's below a shaded dot, or are they beating their earnings? So you want to look at things like that. What are they doing every single quarter to be better? That's a good way to do your fundamental analysis. And then from there, you would just take it to more technical, actually looking at a chart like TradingView or stock charts, or, you know, if your brokerage allows you to chart within the platform. So I would definitely recommend like having that type of a guide whenever you're looking to trade a company. Does that make sense?
Yeah, thanks so much. Yeah.
No problem.
And also to answer Kara's question in the chat, that might be something we definitely can go through in the future. Right now we just try to make sure we're giving y'all the essentials on what you can do to take your research to the next level, as well as do this stuff on your own, so we don't have to so basically we can, like Chris was saying on his Instagram live, like I think a couple of days ago, so we can start moving the conversations forward and start doing more. So Devin's iPhone, you can go ahead and ask your question. Let's see. That's the mute.
Sorry about that. Can y'all hear me?
Yeah, I can hear you.
Okay. Yeah, so not too much of a technical question, but I just want to ask a personal question. You know, in terms of getting your mindset to where it needs to be for options trading, because it can be very emotional. Like, I just wanted to know, you know, if there's any routines, if there's any like mindset things that you guys do to help you learn, and also like if there's ever been any trades that, you know, you've gotten burned on or that you've really succeeded on that stand out to you and that helped you become a better trainer, you know, just by experience, just by like getting in there and either failing and learning from it or succeeding and learning from that.
That's a good,
You want to go ahead and go first, Kay?
that's a good question. A company that I got burned on. I don't trade Walmart. I will not trade Walmart. I will not trade Microsoft because I was trading them when they were doing all of the TikTok news, and I figured out that those are two companies that are very, very delayed when it comes to good news. So Good Catalyst moves those companies very slow to me. So that's a company that I got burned on. A company that I absolutely love, and if you've been in a community for a while, I love Neo. Although Neo has been very bipolar lately, I am still faithful to her. In reference to psychology when it comes to trading, one thing that helped me is to know my limit. I don't trade every single day of the week. I don't care how many call outs there are. I don't care how good something looks. I just don't do it, because the more you trade, the more you're exposing yourself to risk. So I like to look for value trades, something that I can get in and have a further out expiration date, so that I am accounting for recovery if that's necessary, if it needs to recover. So I'm not someone that trades all the time, every single day, because I don't have the time within the community, but I also, it helps my psychology, because having to watch an account all day, every day can drive you crazy. So that's all I got.
I would say a company that got me and made me realize I need to stop worrying about leaving stuff on the table was Moderna, whatever, however you say it, mRNA.
Moderna friend.
Yeah. Anyways, so yeah, that company got me. I was up like, I think it was up like 3,000, 4,000 or something like that. And I was like, man, it's gonna keep going. And like 10 minutes later, that boy dropped. I was sick, to say the least. So that was one that helped me understand that, all right, you got to stop worrying about leaving money on the table and just take it, because worrying about leaving money on the table would take money off the table. You know what I'm saying? As far as like out your pocket, because you can go from being up to being down. So that was something that helped me as far as like my psychology and stuff like that. The other thing, as far as routines, I tend to use aromatherapy now. There's a bunch of different ones you can use. I can't even remember which one. I think I got rosemary on right now. But you can use like lemon, other things. I would look into it. It smells good. Certain fragrances open up your mind and stuff like that, or help you. I think the one rosemary is the one that gives you, it's like a morning picker upper. And I think lemon helps you learn better. So it's just something to look into, you know what I'm saying? So as far as that, that's kind of like how I stay calm and don't worry about it. It's fragrances.
And if all else fails, do not trade with what you are not prepared to lose. If you are working with a small account, not saying that you are, but this is just throwing it out there. What will also help your psychology is that you're saying, hey, I'll be okay if I throw $100 at this trade and I lose it. But if you are tied to, let's say, $5,000, and you put that $5,000 into that trade and you lose it all and you know you're going to be butthurt about it, don't do it. You are asking to be driven crazy.
All right.
Yeah, that was great advice, guys. Thank you. And I also think it was important to know, like, show that, you know, you guys are human too. And, you know, it's a journey, you know, and it really takes, like, as you become a better trader, you know, like the same thing that Chris preaches, but also that's just a fact is, you know, health is wealth. So it's all about being a better, you know, like Ray was saying, you know, just meditating and all that stuff. So clearing your mind, just being better. And I appreciate y'all answering me. Thank you.
No problem.
You guys, if you have the capital too, let's just say someone in the community calls out a trade, you can always buy more time. So if they call out, I don't know, a $20 trade that expires in 2 weeks, if you have the capital to go further out because you want to buy more time, do that. That way you have lower theta impact, you have more time to recover, you have someone that's calling it out because they have faith in it. You know, make sure you're listening and doing due diligence, you know, but you can also buy more time. So just because someone calls out, or you may see Key or Chris calling out for this Friday or however soon, you can buy more time so that, you know, if the trade reverses, at least you have time on your side. So that's just a quick tip too.
And also to Dugoti, I guess that's Dugatti. As far as like with the price targets, like I said, they're a year out. So if you want to, you know, use like 3 month out or 6 month out expiration, then, you know, feel free to do so depending on how close that price target is to the current price. If it's not much and that stock really moves, then I mean you can go with a lower time frame, like maybe a month or so. But like Kay was just saying, it's always good to have more time than necessary sometimes. All right, so Cortez, go ahead and ask your question. Cortez.
Sorry about that. I was trying to mess around with this button, but real quick. So I know you kind of, you know, I know Kate kind of covered just talking about, you know, the way people trade when they have a bigger account compared to how somebody would when they have less funds, that you can't necessarily follow, you know, play from play exactly what they're doing. But kind of my question is like, what would be a good like starter point as far as like your gains and loss? Like, of course, you don't want to sit there and be trying to chase to win every little penny, but you know, to avoid seeing it going down and you know you start panicking and want to sell the moment you start getting in the red. Like, do you have a percentage that you kind of gauge it at?
Yeah. Did you read the trading plan and market action resource?
When I tell you I'm getting into all this, like I just got out of paramedic school, so I'm like I'm slow.
I'm just messing with you, but yeah, just starting out, 20-30%. Either way, take profit at 20 or 30%, cut your losses at 20%. But 20-30% is good because then you can compound, you can keep grabbing that. It's easier in the market to get 10, 20, 30% than it is to get 100%, right? So if you keep your mindset on, I'll just be fair and say 20% because that's what I did starting out. If you keep your mindset on every single time, I don't care what they are predicting the stock to do. If I cut my wins at 20%, I'm just constantly compounding. I'm constantly feeding the beast. I'm constantly feeding my account. And then on the flip side, if you're saying, okay, if this stock goes down 20%, I'm out. The more that you do that, you'll see your account begin to grow. However, with that same sentiment, you cannot overtrade. Don't overtrade because a lot of times people will have that mentality, but they'll enter into so many contracts at one time, and then they could be winning over here and then losing over here, and it's essentially eating their profit. So don't overtrade. Stick to a percentage at which you will take profit and cut your losses, and stick to that. Don't listen to people in the community that's hoorahing and saying, oh my God, I'm up 60, 70,000%. I know that's unheard of, but don't listen to those people. Stick to your plan. Your plan is what's going to make you money. Your plan is what you're going to be able to cash out on when you go to the bank, not anyone else's plan.
Got you. And one more question. So what about, I guess, situation, you get a good option play that's put out, and then you, like, for example, there was one that was put out, it doesn't expire until like next month on like the 19th, but instantly, like after buying in, like instantly down like $100 and something. Like, is it because you have time on your side, you still kind of try to like play to see how that plays out?
We don't do the dollar amount. We do the percentage. What percentage?
What the percentage?
What was the percentage?
Percentage down like maybe 15%.
That's not bad.
Okay.
So when you change your mentality, and the reason why I said we don't do dollars is because it's easy to recoup 15%. The stock has to move 16% in order for you to recoup that, right?
Right.
And to make profit, let me say that. However, if a stock reverses 70%, it literally has to move 70+% in order for you to be profitable. So you have to change your mentality from dollar amount to, okay, what percentage am I down? Is it possible for this stock to move that particular percentage in the amount of time I have left? Not only that, you have great resources out there like the option profit calculator. And then I answered this question for someone in the community. So this is something to keep in mind whenever you're thinking about cutting a stock. Look at where the stock is right now. If it's at $75 and your strike price is at $80 and you have a month left, look at the chart and say, has this company moved before $5 in a month? Is this possible? Look at the amount of time you have left, and look at whatever percentage that you're down, and you ask yourself, is this possible for this stock to do this? And if you don't believe it, then I would cut your losses earlier before you lose everything. And then also just use the option profit calculator because it does a lot of the work for you too.
Okay. Thank you so much. That actually helped a lot.
No problem.
All right, we're gonna try and answer like at least 5 more questions, and then go ahead and wrap up because we're going a little bit over. All right. So Corpo J Daniels, go ahead and ask your question.
Hi, I'm just going to keep it really short. I was really interested in knowing how you guys are, like, what filters are you using when you're in a FinViz? Like, what are you setting your 20-day moving average to? What prices are you looking at?
As far as like what I'm setting I don't personally use FinViz, so I don't know how their scanner actually works. On Thinkorswim, I'm more so looking at like for instance, pre-market, how much did it move pre-market? So I might be like if it moved 5%, or with a like momentum scanner, I think I might be looking at, I can't remember exactly what the settings is. Like if it went up, I think like maybe 100% or 200% over the past like 15 candles, as far as like if there was a volume spike, because I actually like to more so momentum trade. So those are like things I'm setting my stuff for. I see some people set theirs for as far as like the 20-day moving average. They might check to see if it's below it, or they might be checking to see if it's below like the 50-day moving average for somebody who's going to hold long term, because if it can break above the 50-day moving average, it tends to run for a good bit. That's a great it basically runs basically in so many words. But yeah, and sometimes as far as like the RSI, people look at stuff that's like 40 to 50 and they'll set their parameters for there. It just depends on like what indicators they use and what's their strategy. And that's like the main thing. Some people might not use scanners. They might just look at the chart and use like flow algo. So whatever is getting a lot of options buy at a certain strike price, they'll look into
I
that.
was just door dashing. What?
All right, so I muted them. So does that answer your question?
I'll give you my information, which I don't really do a lot. But for my screener, I'm using Flow Algo. So, and I'm looking at it. So I'm not being rude. I'm looking at my criteria on my phone for. So my key filters are a daily volume that's over 500,000 people. I'm looking at mid to large cap stocks, a volume greater than 1.5. Obviously, the country is the United States. Of course, it's optionable. And I am refining my criteria by, just depending on what side of the fence I want to go on, if I want to do oversold or overbought conditions. So that's just a few things that's in my screener.
How do you spell that?
Did you say anything?
Yeah, I was wondering how she spells. I don't know what she said. What screener do you use?
Flow Algo. Like flow algorithms.
Okay.
Yeah.
Flow Algo.
Yeah, and the criteria that I like to look at is on volume on stock is 500,000. The stock market cap 50 million. The price change is at least 1% greater than 2 bars ago, and the current price is 1 period higher. And so basically that's what I'm looking for. And let's see. Yeah. And so that's like on the 5-minute candle as far as like the momentum aspect.
If you guys are interested to just try out the screener, Flow Algo is doing like a 2-week trial right now, I think for like $37. It's normally more than that. It's like $100 a month. But you at least get to feel around and, see some pretty cool stuff in there.
All right. So, no problem. Let me go ahead and load it. All right. So, John Cham, you can go ahead and ask your question.
Yeah, what's going on? Can you guys hear me?
Yeah, I can hear you.
All right. Thank you. Once again, I just want to say thank you just for this whole Discord and just all this information. But I've been doing pretty good with everything that you guys have, like as far as Wealth Squad University and everything. Now, I've asked this question as of recently in the chat. I'm trying to get into chart reading. And I see that you guys are talking, various like Flow Algo and, just different platforms for chart reading. I noticed Chris made mention of the book by Gerald Peters, The Money Flow. Yeah. And I just really want to get your opinion on that. I asked it, but now that I have you actually right here, I just want to know how would that translate into me buying options and, my entry point and my starting point. And also, is that something that I can understand right now with the basics that I have right now, or do I have to start from somewhere else?
Nope. What you about to say, Kay?
He's great. Even though I feel like I'm further along in my journey, believe it or not, I still take a lot of beginner courses because I feel like everybody's going to give you a different jewel. And Gerald Peters is great. So I recommend him. And then he gives a lot of information away on his social media, Full Auto 11 for free on Sunday.
Yeah, I just logged into that as well.
Yeah, so he's great. So I highly recommend him. And then if you need more resources, I put a trading library of a bunch of books that you would normally have to pay for into Market Facts and Resources in there for free. So you guys should be armed pretty well.
Okay, I truly appreciate that. Truly appreciate it.
No problem.
All right.
All right, Joey, you can go ahead and ask your question.
Hey, sorry about that. Yeah, so I made a mistake this week, kind of taking a whiteboard stock and buying an option off of it. And I guess it didn't do too good, but I wrote it out to expiration just because it wasn't too much. I was kind of just testing it out, and I didn't mind if it failed because the contract wasn't too much. But why shouldn't we do that? And like, what's the logic between not using whiteboard as an option play?
It's because Chris, when he does whiteboard, he's actually thinking about swinging stocks with that in mind. So sometimes whenever he buys it, obviously we don't know when it's going to go up or down. So when you just actually buy the stock, you know what I'm saying? It doesn't have an expiration on it. And that's why you shouldn't use whiteboard for options, because you don't know when it's going to happen. Sometimes when you post whiteboard, it might pop the next day. Sometimes it might take a couple weeks. So that's why you wouldn't want to use whiteboard. Whiteboard, it usually has like the date on it. So like the one in there now is like whiteboard 16 February. I'm pretty sure the next one's gonna be 22nd February. That's why you wouldn't use it.
Yeah, because your options is going to be tied to an expiration date, and so with the whiteboard, the mentality is to buy low, right? So he's buying low. He's positioning himself early enough so that when it does run up, he can capitalize off of that. But he doesn't know when that's going to happen. And so obviously your options contract is going to be tied to an expiration. And if he's planning to invest into something right now with the hopes of it running up months from now or years from now, and you have an option contract that has an expiration tied to it, you could be screwed.
Does that answer?
Awesome. Thank you.
No problem.
All right. And then this will be the last question. Also, real quick, it's up to you if you want to start with stocks first and then options. That's up to your risk tolerance as well as how much money you have. It's up to you. And also like to summing it up, you can say that you would want to use fundamental analysis. And if you want to, so using fundamental analysis, also looking at the sentiment, you would use Twitter, investors.com, CNBC, Yahoo Finance. I forgot who said the ones for as far as Market Watch. I know for sure they have the analyst upgrades, downgrades. And as far as the analysis, as far as trends of stock, like looking at the chart, I use TradingView. Thinkorswim has a built-in chart. I think Webull has a chart. So that's what you would use. And then obviously you would come up with your strategies from there. In Market Facts and Resource, I have a playlist, an option playlist, and it has different strategies in there that you can use as far as chart reading. All right, so this last question would be Kiera Dobson. You can go ahead and ask your question.
Okay, thank y'all. I just was curious. Can you hear me?
Yeah.
Yeah, I can hear you.
Okay. So yes, I just started like 2 days ago. And I was just curious on what kind of platforms you use for options, what names of different ones. I know what you were using for the scanners, but what are you using for your options? The best ones for you?
I use Webull, and then there is a list of commonly used brokerages that's listed into Market Facts and Resources as well.
Yeah,
Okay.
and I use Thinkorswim, TD Ameritrade. And like I said, that one to me it's complicated to learn, and I haven't fully went through there to learn it because obviously I'm using TradingView as a chart. But as far as like these scanners, it's probably one of the more powerful and the most powerful, at least to me. I mean, I haven't tried all of them, but most people build their scanners on Thinkorswim, and they look at the chart, all that other stuff. Thinkorswim actually also has something called Benzinga Squawk on there, where like this guy named Charlie like tells you like news before it like hits the market and stuff like that. So to me, it's a lot of resources on there, and they also tell you how to use their platform. You just got to go through there and take the time to learn. So that's like the main thing. So I'm gonna say that's wraps. I'm gonna say that wraps everything up. We're gonna go ahead and get out of here. We went over a little bit, which is fine. I hope this was very helpful for you guys. And we'll catch you next week. So peace.
Thank you. Okay, thank you.
No problem.
Thank you. Thank you.
Thanks, guys.
Thank you.
Well,
Thank you, guys.
thank you, everybody. Thank you.
Thank you.
Thank you,
Appreciate it.
Thank you all. I appreciate it.
Appreciate it.
Thank you. Thank